The vexed state of our economy continues. The Treasurer warning about falling real wages, while retail sales keep booming. Today, JB Hi-Fi said sales in the last financial year were at a record. Business Editor Ross Greenwood joins me. And Ross, should we read much into this?
Well, to a certain extent, no, because it's looking into the past. It's going to the year to June 30. Now, what we already know, though, is that Australians are not yet feeling the impact of the rising inflation and interest rates. Now, here's the JB Hi-Fi sales over the past year to June 30. They're up by 3.2%. As you say, they're a record. Net profit also is stronger. Now, the audited results are going to come out in the middle of August, but these are the numbers that they're putting out today as a preliminary sort of estimate for investors. Now, these are good, really good, but they also go, if you like, with the, sort of record retail sales that Australia has seen for the past 5 months. The real issue is going to be when the Reserve Bank continues to raise interest rates. A little later today, we're going to see Reserve Bank minutes. And what they're likely to show is the appetite for more rate rises in the face of the higher than expected inflation, not just here, but around the world as well. And that, of course, leads us to the rather delicate situation of what do retail sales do next year. And that's, I kind of guess, what a lot of investors and a lot of people are going to be watching for in regards to not just the prospects for employment, but also the prospects for the share market over the next 12 months.
Okay, very interesting indeed. Not quite the flip side, but BHP has today warned about rising costs for its business. As it says, iron ore shipments should be flat or falling this year.
Yeah, pretty much so. That's the story that's going out. Now, BHP, of course, Australia's biggest company, so it's almost a litmus test. But exactly what's taking place in companies like JB Hi-Fi is going to be taking place in BHP, but perhaps more pronounced because its white workers are paid higher wages and the skill shortages are more intense in this industry. So this is what they've reported today. Effectively, this is their iron ore shipments, which is the key. What we know is that as a result of China's downturn, really that the amount of iron ore it's now demanding is less, and so that has an impact. Now, they're still saying that this next financial year they expect to be shipping in the middle there. It's about the same as what they've been shipping for the last 2 years, but also the prices come down rather dramatically. The same sort of story is out there for coking coal, which is used in the steel making process, so that's a really important aspect. Conversely, oddly, copper and other metals that it makes, as well BHP, are in strong demand right now. And that's partly as a result of even the rollout of electricity wires around the world, plus also, of course, the new battery technology that's coming. So that's where they've had enormous demand for their business. Now, BHP shares are well down, almost 20% since their peaks sort of in the middle of, at the beginning of this year. And so it's just interesting to note that all of those things are now building up on Australia's largest company.
Okay, that's somewhat in the past. What about the future? We are getting a glimpse of what the future looks like from the US right now.
I want to take you through a few bits and pieces. So overnight, Apple, one of the world's largest companies, has indicated that it will have a hiring freeze. Now, effectively what they're going to do is that they're going to continue to expand the business, but they're just not going to expand the jobs at the same rate. Now, this is really important as they've come out with quarterly earnings, and really this is going to be interesting just to see because it's not the first of the big tech companies. Tesla has done the same thing. Google has done the same thing. And this is because as you start to get rising wages, what you tend to find is that businesses really have to make a decision. Do they actually pay those higher wages, and every Australian company faces this, or do they either A, stop hiring more people, or do they let people go? And this is the reason why inflation and unemployment in many ways are linked, Laura. What a lot of people don't realise or understand is if you have high inflation that lasts for a long time, eventually it leads to higher unemployment. And of course, while Australia has record low unemployment right now, the lowest in 50 years, it's a situation where eventually that gets taken up and businesses make decisions as to whether they pay the higher wages or ultimately try and freeze or reduce their labour forces.
Wow, okay, that is a good reminder. Now, overnight, we've seen tech stocks being dragged down in the US. Bank shares are also in the spotlight for similar reasons.
Yeah, that's exactly right. So, look, as I say, this affects everybody. As soon as you get wages taking off inside your community, inside your economy, it affects every business. So in this particular case, it's Goldman Sachs, one of the biggest banks in the world, which has suddenly seen itself in a situation where profits are under pressure. The share price is under pressure. In fact, in the last period of time, you can see here, the second quarter compared with last year, the earnings are halved. Now, this is really about deal flow. So there's fewer deals going through because people are worried about interest rates, worried about inflation. And as a result of that, costs are rising. So it doesn't matter whether you're in banking, whether you're in mining, whether you're in retail, whether you're in computers. It's the same story all around the place. And this is going to be the continuous thing. So here in Australia, we're sort of getting a taste of what's to come by what we see in America right now. It doesn't matter whether it's Apple or whether it's Goldman Sachs. It's the same type of story as to what's to come. And that's the reason why in the earnings results to come in August, it's going to be the outlook statements from the chief executives that probably is going to be more important than the profit they're reporting for the last financial year.
Ross, before I let you go, we're going to see this economic statement from the Treasurer Jim Chalmers next week in Parliament. Already he's warning that it's going to be quite confronting news. For the last 5 years, Labor has been talking about getting real wages up. So I thought it was quite a big concession from Jim Chalmers yesterday, and one that he's essentially hinting will not improve for years.
Yeah, it's interesting, isn't it? Because the problem is at the moment for the government and for the community generally is while you've got people wanting higher wages to keep up with inflation, to keep up with rising interest rates, on the other side, that is where the inflation comes from, because if you do get that inflation from wages, it's harder to get out of your system. Oil prices, for example, have fallen from $125 a barrel back down to $100 a barrel. That's deflation. That's falling inflation. And so the problem is that when you get inflation from wages inside your system, the expectation of higher wages, that's when you really have problems in getting it out. That's the reason why the interest rates are going up so fast right now. Mind you, right now, the here and now is strangely, last month the budget was in surplus. That hadn't been seen for a long time, Laura. And so while, yes, there's a confronting set of outlook statements coming, the right here and right now, like retail sales, is actually better than expected.
Ross, always good to see you. Bit of light in there. Love it. See you soon.